Watch this video to learn 5 simple tips that you can use right away so that when you're making the transition from sim trading to live trading, you don't choke under pressure, blow up, or ruin your nicely ascending equity curve. Hi, and welcome back. For anyone who hasn't been here before, my name's Créde Sheehy-Kelly. I'm a high performance and trading psychology coach, and I'm here to help you master your mindset, manifest your goals, and lead a richer life. Please do like, subscribe, and hit that notification bell if this video gives you value for your trading and you want to stick around on the channel for more. Going from sim trading to live trading is like moving from high school football to the NFL. The sport itself is basically the same: the rules, the objectives, the basic technical skills. But the difference in the level of pressure and the level of self-mastery required to be successful makes it an entirely different ballgame. Traders who are poised to make this important transition in their trading often fall into one of 3 categories. Category number 1, they are blissfully unaware of the potential threat to their trading performance at this transition point. So they expect to keep hitting the same results, only this time they expect that they'll be welcoming real dollars into their bank accounts. Category number 2, they understand that there is an increase in pressure at this juncture and that it could potentially have a negative impact on their trading, but they're just not quite sure how exactly that might manifest and what actions to take to preempt this. Category number 3, they understand that there is an increase in pressure when going from sim trading to live trading, and they take the time to actually understand the potential pitfalls, and then they arm themselves to the teeth with trading psychology solutions to make this transition pain-free. So, number 1, unaware; number 2, ill-equipped; and number 3, prepared for profit. By the end of this video, my aim is for you to be in category number 3. And if you're already in this category, then hopefully this video can provide you with even more tips and resources to help you navigate this transition like an absolute boss. No pain, no breaking your trading rules, no unnecessary losses due to choking under pressure. But why is it that going from sim to live can be so difficult? It's very simple: because the pressure increases. Pressure is inherent in trading. It's a high performance arena and your money's on the line. So of course, it's pretty accurate to say that pressure is part and parcel of trading. When you're first learning on sim, the main challenge is to become technically proficient enough to have a well thought out profitable strategy and to execute it in the market. And I'm not diminishing the level of skill involved in that part of the trading journey, but it's only the beginning. Because when you transition from sim trading to live trading, there's a lot more at stake for every decision and action that you take in the market. And that's just a fact. And often when changing from sim trading to live trading, it becomes a whole lot more difficult to actually execute that well thought out plan that you've created. You start breaking your trading rules. When pressure increases, any cracks in your trading psychology will be amplified. So whether that's subconscious limiting beliefs, scarcity mindset, self-doubt, self-criticism, an inability to accept mistakes, they'll all come out to play like it's Halloween night. And your cognition, or your thinking, is also affected. When you feel under pressure, the efficiency and the effectiveness of your thought processes, your attention, and your decision-making decreases. Even if you didn't encounter any of these issues when you were trading on sim, it doesn't mean that those cracks aren't there in your psychology. It just means that up to now, the level of pressure that you felt under was tolerable and you had the skills to be resilient to it. But all that can change in an instant when you go live. But of course, there is hope. By taking some preemptive steps, which I'm about to share with you now in this video, you can increase your resilience to pressure and you can neutralize any of those potential psychological banana skins before you ever risk your own money in the market. And these are habits that I recommend you implement and you sharpen while you're still trading on sim, so that by the time you get to trading live, they're well bedded in and you're really used to using them. This is key. Just like in sport, you wouldn't introduce some new play or some new routine in a championship match. You would practice it in training over and over again until it was automatic, and then you would take it into a heightened pressure situation. So it's the exact same here with trading. So here are my 5 trading psychology tips for a pain-free transition from sim to live trading. Tip number 1. Treat sim trading exactly like you would treat live trading. So go through a detailed pre-market routine. Go through your fundamental and technical analysis exactly as if you were trading live. Stick to your trading rules in the same way that you would be sticking to them if you were trading your own money. Don't give yourself any extra leeway just because you're trading on sim. If you have a daily max loss limit of an amount that you would only be prepared to lose if you were trading real money, then stick to that loss limit when you're trading in sim. If you would have a rule trading live that you would only take 3 trades in a day, then you can only take 3 trades in a day when you're trading on sim. Don't skip the daily tracking of your trading metrics or doing your trading review just because it's on sim and it doesn't matter. You get the idea. If you want to trade well when you're trading live, then in sim, you have to replicate the exact same rules, habits, and mindset that you would be using when you were trading in a live scenario. Tip number 2, prepare for the pressure. We already mentioned that pressure increases when you start risking your own money or somebody else's money in the market, and that this can test your psychological fault lines, showing up cracks in your psychology that weren't so obvious previously. But you can prepare for this by getting to know your trading kryptonite and implementing solutions to address this while you're still trading in sim. Identify the trigger events that could cause you to break your rules. Maybe you start to see a pattern where if you didn't get enough sleep the night before, you're more susceptible to emotion-based trading, revenge trading. Maybe you notice that after 3 losses in a row, your inner Hulk comes out and takes over the keyboard and tries to turn a red day into a green day at all costs. Or maybe you notice that inner voice doubting you every time your A+ setup appears, and you listen to it just long enough to miss your entry. Figure out what your personal triggers are for breaking your trading rules. And then once you know what they are, put mental training techniques in place to address every single one of them. And that could be something as simple as making sure that you get 7 hours or more sleep a night on a night before you trade. And you have a rule that if you only get 5.5 hours or less, you don't trade the next day. Or it could be targeting your subconscious limiting beliefs with affirmations so that you can actually stop your inner Hulk or your inner critic from taking over your trading. And if you want a done-for-you mental training resource to help you work on your subconscious limiting beliefs, that's specifically for traders, I'm just going to link my trader affirmations resource here. And this is something you can listen to every day, maybe in your pre-market routine, that will help you to build the mindset from the inside out of a successful trader. Tip number 3, let the data decide when you're ready to make the transition from sim to live trading. One common mistake that traders make is that they wait for their emotions to tell them when they're ready to make that transition from sim to live trading. So they're waiting until they feel confident enough or they feel ready enough. In reality, it's best to let the cold hard data tell you when it's time. Do some strategic planning well in advance of when your emotions are pulling you to make that leap to live trading, and actually map out the exact milestones that are objective and measurable that would let you know that you're ready to make the leap. This needs to be a lot more specific and concrete and detailed than just when I'm profitable or when I'm sticking to my trading rules. Make it as detailed and specific as possible. So for example, when I've made 10R consistently every month for 3 months in a row, or for at least 5 out of 6 consecutive weeks, I stuck to my daily loss limit, I respected my stops, and I only took A+ setups. They're all concrete, measurable things that you can objectively assess yourself against in order to let you know if you're ready to move forward. You have to figure out the milestones for you that are meaningful, reasonable, and achievable, but write them down and track them. All data, no drama. By letting the data tell you when it's time to make that transition, you reduce the risk of bias or elation or impatience driving your decision making. Tip number 4, 100% accountability. Make your trading plan as concrete and rule-based as possible so that you can take 100% accountability for your performance. By reducing the opportunity for subjective, in-the-moment decision-making, then you're actually able to assess in black and white how well you stuck to your trading plan. What does having a concrete trading plan look like? Well, at the very least, you have very well-defined rules around your entries and exits. So you know the exact criteria and you can list them that constitute an A+ setup. And you have, similarly, exact criteria for when it's appropriate for you to get out of a trade. So that could mean when you've hit your profit or R target, or when the market is telling you when to get out. But it's all defined and it's something that's black and white. So you can objectively assess whether you stuck to that plan. In the same vein, don't just aim for a green day. Aim to set goals that reflect the successful execution of your plan. So for example, in my 1.5-hour trading window, I took all of the A+ setups that appeared, or I limited myself to only taking 3 trades in my trading window. And then most importantly, track the hell out of your data. Note down each day objectively how you fared against these metrics. By keeping yourself accountable in this way, there's no room for your emotions to skew your perception of how well or how badly you're doing, or skew your perception of when is the right time to go live. Tip number 5, and this is crucially important: commit to full days trading live or full days trading sim, but don't mix the two. Of course, it's possible that you might want to gradually ease yourself into trading live, and this can be a really good approach when you structure it properly. So for example, saying that you'll trade 2 days live out of every 5 days of the week that you're trading. So by doing that, you're incrementally increasing the pressure, which gives you time to build up your psychological resilience to that pressure and avoid any catastrophic drops in performance. But, and this is a major caveat, if you do choose this approach, make sure that you don't mix sim trading and live trading on the same day. And I know that there's a huge temptation to do this because a lot of traders do it when they're making that transition from sim to live. They'll start out a day trading live, it won't go their way, they'll take a number of losses in a row, or they'll hit their daily max loss, and then they switch to trading sim. This is not an approach that I would recommend because it sends a signal to your brain to treat sim trading differently than live trading. And we said in tip number 3 that you should be treating sim exactly as if you were trading live in relation to your preparation, the actions you're taking in the market, and your daily review. So if you suddenly start changing the rules and allowing yourself to go over your max loss or to increase your position size just because you're on sim, then what you're doing is actually training your brain to break your rules, especially under conditions when trading isn't going your way. It's challenging enough to stay highly disciplined and to try to stick to your trading plan at the best of times without proactively creating a habit of breaking your rules. So make a rule for yourself. If you start the day trading live, then you finish the day trading live. And if you start the day trading sim, then you finish the day trading sim. This very simple rule will help you to hold yourself accountable to your actions and results, and it will help you to cultivate the mindset of a highly disciplined trader. Okay, so that's my 5 tips for a pain-free transition from sim to live trading. And if this video was helpful to you, let me know in the comments below, and we might make a part 2 of this video because there are a whole lot more strategies and techniques that I could share around this topic. And if you want to learn more about how to achieve pro-level discipline and consistency in your trading, then check out my free trading psychology masterclass. I'll put the link in the description box below and in the pinned comment. Take care, and I'll see you soon.